Did you know the Facebook parent company Meta's financial results for the fourth quarter of 2021 led to a striking chain of events? Meta, formerly known as Facebook, has taken an astronomical plunge of 26.4%, having other tech stocks down along with it. The decline obliterated $230 billion from the company's valuation, while Mark Zuckerberg has lost around $30 billion with Meta's stock in a single day. This event marked the biggest one-day drop in US stock market history. In this video, we are going to talk about why Meta is in so much trouble and what does this signal for the company. Make sure to stay until the end to learn the truth behind history's biggest company loss. Moreover, if you like finance content, consider subscribing or liking the video. I spend a lot of time researching these stories and only a minor percentage of my viewers are subscribed. It's free and you can always change your mind. Now, without further delay, let's move straight to our subject. You may have noticed the stock market is struggling to start this January. The Dow Jones Industrial Average fell 1.5%, over 500 points, while the S&P 500 lost 2.4%, its significant drop in nearly a year. Nasdaq Composite is doing even worse, dropping 16% in the same period. Unfortunately, the downfall has had a powerful impact on several companies, especially large tech firms like Netflix, Twitter, and PayPal, excluding Meta. Facebook sustained its value during this time, displaying an exceptional performance. But recently, in the first week of February, Facebook experienced a downturn like none before. This tremendous dip was because of two reasons highlighted in a report. A quarterly of last year showed for the first time a declining number of daily active users for Facebook. The company blamed this on increased competition from video sharing app TikTok. In addition, Apple's App Tracking Transparency (ATT) feature and Google's privacy measures also contributed to the great downfall. They allow users to block Meta's trackers and are also responsible for many users turning their back on the platform. It may influence Meta's ad revenue by $10 billion this year, as per the company's estimates. The prediction served as yet another red flag for investors in the company's stocks. In any case, a decline in number is only indicative of a drop in Facebook's long-established domination in the world of social media. User growth on Facebook this quarter was stagnant at 2.91 million monthly active users as compared to the 2.9 million users reported last quarter. It represents only an increase of 4% year over year. The platform's daily active users declined from the previous quarter for the first time, dropping from 1.930 billion to 1.929 billion globally. Since most of Meta's revenue relies on its advertisements through its various online platforms, a drop in active users points to a consequent decline in the ad revenue from these entities, including Facebook and Instagram. Facebook losing its users wasn't the only reason for its falls. It was a disappointment for the company that investors have become accustomed to delivering spectacular growth. Meta also reported a rare drop in profit due to a sharp increase in expenses as it invests in the metaverse, a digital world accessible through virtual reality. It spent an astonishing $10 billion in 2021 on projects related to the metaverse, which is far from bringing in any substantial revenue. Real estate sales in metaverse surpassed 500 million last year and are anticipated to double this year. Investors who are eager to see some quick results gave Meta CEO Mark Zuckerberg's impressive plans to create a metaverse a big vote of disapproval. In addition to the metaverse and growth concerns, the company is under pressure by regulators and government bodies regarding its effects on teens. The whistleblower scandal enveloped the company last fall, prompting fresh questions about its handling of bad content on its site and Zuckerberg's leadership. The overall US economy isn't looking too great either. On the annual level, the US economy contracted 3.5% in 2022, the worst yearly decline since 2009. The Atlanta Fed's GDP is currently tracking a first quarter GDP gain of just 0.1%. Due to this decline, real wages are falling, productivity growth is down, companies aren't competitive in the global market, and interest rates are rising. The nation's infrastructure is collapsing. People aren't sure whether to invest their money in tech stock places. For now, it's still a good idea to do so, but maybe not in a couple of years. Meta may not be the media darling it once was, but it's hardly on the brink of bankruptcy. The company made $40 billion in profit last year, mostly from advertising. And while the main Facebook app lost 1 million daily users in the last quarter, the company still has 1.9 billion users around the world. Plus, the other Meta platforms like WhatsApp and Instagram are still bringing in more users and generating enough revenue. The crash of Meta might just be a stock market overreaction. The market losses might not hold, especially given the recent wild fluctuations in the tech market, and will rebound soon enough. But further mistakes can cause a much bigger issue for the company. So, what do you think about this biggest downfall in US history? Is it concerning that Meta plummeted so intensely, causing the whole stock market to take a hit? Or might it be the beginning of something greater? Let us know in the comment section. If you learned something new from this, click the subscribe button and hit the bell icon to be the first to see our new videos. We make deep dives like this every week where we uncover the secrets of money and business.